Nordstrom this hour topping street estimates, reaffirming the full-year outlook. The stock moving higher in overtime. Gap also moving higher after a strong earnings beat. And despite missing on revenue and same-store sales, Ulta moving higher as well. Joining us now, Telsey Advisory Group CEO Dana Telsey. Dana, help us make sense of what's happening here with the consumer, with retailers, if we're wrapping in what we've heard already from Walmart, from Home Depot, and now this latest spate of earnings. Who's got discretionary income? What are they spending it on? How much do they have left?
So overall, and very good points, John. Thank you so much for having me. I think it is a topsy-turvy retail season. We have a cautious consumer, really in all income levels. You can certainly see the categories. I mean, you saw it Nordstrom today, active and beauty led the way. You certainly saw it Gap, it's the expense reduction. So retailers are navigating. I think there's more margin clarity than sales clarity, given the fact that you have lower freight costs everywhere. There's been surprises. You look at Abercrombie yesterday. What's interesting about Nordstrom today, they beat the number, but they maintain the guidance for the year. So let's see what they say on the call about the back half of the year. I think on Gap, it really was about the expense control that led it. And at Ulta, beauty is a beautiful thing given the categories where we've seen increases.
How much of that bottom line discipline that we're seeing is the result of what we all learned during the pandemic, and certainly what these retailers had to deal with the supply chain issues? And when does that benefit, if it does, run out?
So with this year being more margin clarity than sales clarity, we should continue to be able to get lower freight costs, maybe through the first quarter of 2024. Then you're going to need to see sales take over and drive top line. And the other thing you're seeing is a return to stores. And typically store sales could be very productive and very profitable.
When are we going to know, or at least get the first signals of what the holiday season is going to look like? And of course, this is an omni-channel world we're living in now. It's not just showing up in stores. It's also what gets ordered online. With the questions about how much discretionary income the consumer has left, it would be nice to get some clarity there.
I totally agree. I'd love to see some more clarity, too. Keep in mind, we're going to have student loan payments coming up, and with the average household having monthly expenses of $6,200, and you look at the student loan payments adding anywhere from 3 to almost 8% to those monthly expenses, you're going to need to get through part of October and see what those expenses are doing to the low to middle income consumer. Plus, we're going to have another Prime Day, so we'll get to see what the power of how consumers are thinking about their spend. To me, it's middle of October.
Okay, so let's talk Nike before you go. It's been stuck in the mud, under $100 a share, but you like it. Why has it been trading so poorly, and what turns it around?
You mentioned Nike, right? I just want to make sure I heard you.
Yep,
so I
Nike.
think overall on Nike, I think keep in mind what we've seen. You see new brands pick up like On and Hoka. They're gaining distribution. You're seeing overall Puma and Adidas lately. They just reported their results, and you're definitely seeing a little bit of a more challenging environment. I think what turns Nike around after the multiple days now of a downturn, with the distribution that you're seeing and newness, and obviously at Foot Locker and Dick's miss, I think what turns Nike around, it's innovative product, and we're going to need to get discretionary spending out there. It's important. They need to create that newness to drive demand. I would have confidence that a brand like Nike with global reach has the collaborations and appeal and innovation to do that over time.